Like me, many of you are probably scratching their heads this weekend trying to get all those numbers together to file your tax returns on time a week from Tuesday. Now, you do have a 2-day extension this year. The deadline is April 17th instead of the 15th, which falls on Sunday. Now, is there anything new you should know this year? How will you be affected by President Trump's new tax reform? I've got just the person to answer those questions. Martin Davidoff is a nationally recognized authority on tax issues. He's an attorney and a CPA and founder of Davidoff and Associates in Dayton, New Jersey. Good to have you back with us on this difficult subject of taxes. First, explain why. Generally, if it's a Sunday, your deadline's on a Monday. Why is it Tuesday this year?
Well, this year it's Tuesday because it's Emancipation Day in the District of Columbia, and if there's a holiday in District of Columbia, that can't be a due date.
Emancipation Day.
And all the states are following suit. So even though the states don't have holidays, the state taxes, New York, New Jersey, Pennsylvania, Connecticut, will also all be due on April 17th.
Okay, and how many of us like me still won't be ready?
A few million.
Okay, so let me ask, the big question is, what are the major changes that we should anticipate as a result of this tax reform bill?
Well, the tax reform bill primarily impacts 2018. So it may impact your 2018 estimated tax payments.
So the average taxpayer is not impacted by this bill?
Two small things are impacted. One is the floor for medical deductions is if your income is over 7.5%, if your medical deductions are over 7.5% of your income, rather than 10%, you'll be able to take your medical deductions. In addition, there are some additional benefits for investments made after, I think it's September 27th, 2018, for businesses where you can deduct 100% rather than 50% of your capital investment. So those two changes impact 17. Most of the other changes that were going to take place, there was a bill passed in February of 18 that extended a lot of things from 16 to 17 that are now impacted, such as the tuition deduction, such as the mortgage insurance premiums. Those had expired at the end of 16, but Congress in February of 18 retroactively reinstated those.
What about the standard deductions? That was supposed to
the standard deduction go up just a little bit, just your inflation rate. The big standard deduction, the doubling, happens in 2018.
Now the minimum, or is it the minimum alternative minimum
you
tax?
got it, the AMT.
Okay.
Yes.
I mean, that tax issues confuse me. So what happened to that? Is that still in effect?
The AMT is still in effect for 17 completely, and in 2018, it will be less invasive upon most taxpayers.
Now, how can you maximize your deductions?
Well, most of what you had to do to maximize your deductions was in 2017 before year end is to take actions, and we talked about that in September. However, you still can do some things. You can still contribute to your retirement plans if you have you can set up an IRA up until April 17th, 2018. You can also set up for self-employed people a SEP plan, a self-employed pension. And you can actually set that up, and you can make contributions up until October.
Well, let's find. This is something you can do now while you're filing
yes,
a return?
This is something you can do now.
I think that's important enough, Marty?
Yes.
Let me and everyone else hear about that again.
Absolutely.
So you contributing to your IRA and not the IRS.
Right. You're contributing to the IRA. You can contribute up to $5,500. Again, there are phase-outs depending upon whether you have a retirement plan at work or whether your spouse has a retirement plan. But many people can contribute up to $5,500 to their IRA and another $1,000 if their age is 50 or over.
And you can use that as a deduction on your current tax return?
You can use it as a deduction on your current tax return, and then the money gets invested tax-free until you take it out. And when you take it out, then it will be taxed, unlike a Roth IRA, which has a different structure.
I'm calling my tax consultant right after this broadcast.
I think you should.
What about medical deductions?
Again, medical deductions, get your receipts together, see if you're over, if you make $100,000, you're going to have at least $7,500 in medical deductions to get any benefit. Except in New Jersey, you only have to get $2,000 to get any benefit because they have a 2% threshold versus the federal, which has a 7.5% threshold.
Now, there's also talk about deductions for mileage that you incur for business.
That's correct. If the amounts are for your business, you get 53.5 cents per mile, or your actual expenses. So if your actual expenses for the business use of your automobile are more. In addition, there are mileage rates for charitable contributions, which is 14 cents per mile if you use your car for charity, and for medical at 19 cents per mile.
Now, what about folks out there who they feel they don't have enough money to pay their taxes and they just ignore it?
Well, that's a big problem because what happens when you ignore it, you get hit with a 5% per month penalty. That penalty builds up quickly, whereas if you file now, you can get into an installment agreement with the IRS over 72 months if you owe less than $50,000, and you can file a Form 9465 and just get that in. But filing late, unless you have an extension, is never a good idea. And if you're ready to file your return, I would encourage people to file their return and then deal with the IRS afterwards. And it's always more important to stay current in 18 and 19 and 20 than to deal with back taxes and pay them and always be on a wheel trying to catch up. Pay your current taxes, and the IRS will give you time to pay the past taxes.
Now, under the new code, if I'm correct, are you mandated now to make quarterly payments? Are mandated to do that?
You've always been mandated to make quarterly estimated payments if you don't have sufficient withholding and you owe more than $1,000 per year. So people who are self-employed, people who are in retirement and may not be having withholding on the retirement plans, they pay, their equivalent of withholding is to pay quarterly estimated taxes. And that avoids penalties on underpayment.
Now, there are people who have income from eBay or Airbnb. Is that income, I think people sometimes feel that they don't have to report that.
Well, it's very interesting. I had a potential client walk in the other day who was worried about the fact that she got an IRS notice about not reporting some income from eBay. And after we talked about it, we found out the cost of her goods, her transportation, her home office. It ended up she didn't have much income. So I would encourage those people to work with a CPA, try to eliminate many of the income through deductions, and you may not have a big tax or any tax at all.
Now, what if you don't have a W-2 or a 1099?
Well, if you were supposed to have gotten a W-2, you should call your employer and say, hey, I need my W-2. If not, there's a form that you can file with the IRS that basically tells them, a Form 4852 that says, here's the numbers that should have been on my W-2. Similarly with a 1099, if you don't need the 1099 to file your tax return, you just needed to know how much money you should be reporting. And if your own records don't have it, you can report them anyway based upon your best records, but call your employer. Also, the IRS may get a copy of the 1099. You can go online to the irs.gov, hit Get Transcript, and take a look at your your wage and income transcript, and they'll have it all there. If they don't have it now, they'll have it in a few months. File an extension, but pay the tax now that you think you may owe.
Now, for those who file their own tax returns, what's the most common mistakes they make?
Common mistakes are not really being diligent about getting all of your information. One thing people do, they often don't report capital gains and losses because they think, oh, I lost money on that transaction. I sold the stock, but I lost money. Or I got an option and they include it on the W-2. But what happens is if you don't report these stock transactions, you'll get a notice from the IRS assuming that your cost was zero, and then you're going to have to deal with the IRS with a very big number.
Anything change with estate taxes?
With
estate taxes.
Estate taxes, there's a change. It's now doubled the exemption in 2018 to $11 million, approximately $11 million, from about $5.5 million. So those under $11 million won't have to file estate tax.
I remember something when this new tax code was announced back in December about mortgage payments and property tax interest. Could you still deduct that this year?
You can still deduct interest up to mortgages of $750,000, but not the home equity loan interest, only the interest on your personal residence or your second residence. But don't get fooled. Sometimes those home equity loans that the bank calls them, you have to distinguish what a bank calls a home equity and what the tax law calls a home equity. They're two different things. The tax law calls even a home equity loan for banking purpose that's used to improve your house. Those are acquisition indebtedness. They're deductible.
What about your taxes, property taxes and other taxes? You used to be able to make deductions for that.
You could deduct them all, and now they're going to be limited in 2018 to $10,000.
But not this year's return, right?
Not the 17 return.
Okay, that's important to know. Final tip? What do you tell folks? File on time?
Final tip is file on time, or at least get an extension. You can file a Form 4868, I believe it is. You can go online and get the form, file an extension. Don't be late.
And the new tax code does not really affect the average taxpayer this particular year.
The new tax code doesn't have a major effect on most taxpayers this year.
But start keeping your receipts for next year.
Absolutely.
E. Martin Davidoff, Davidoff and Associates in Dayton, New Jersey. Thank you so much. We always appreciate your guidance. I'm sure the bill will be in the mail.
Thank you very much.
Thank you for joining us. That'll do it for our program this week. If you have any comments or wish to see this broadcast again, log on to our website, pix11.com/news closeup. I'm Marvin Scott. Thanks so much for joining us. Enjoy the rest of your Sunday, everyone.